It's wonderful to hear those stories from our very experienced panel of central bankers. Now time to look into the future. So as we've mentioned, over the past quarter century since the Asian financial crisis in 1997, Asian economies have grown substantially. They've become a major driver of global growth. And the region's financial landscape has also been transformed, in part by the advent of the digital era. So looking ahead, what are the key challenges and opportunities for Asia's economic growth? With emerging technologies and the challenges posed by climate transition, how can financial institutions continue to evolve to better finance the region's long-term growth and transformation? I'd like to invite our moderator on stage, Mr. Zhang, Chief Representative for Asia and the Pacific, BIS, as well as the following panelists: Filippo Gori, CEO Asia Pacific, JP Morgan; Eric Jing, Chairman and CEO Ant Group; Amy Low, Chairman of Global Wealth Management Asia, Co-Head Wealth Management Asia Pacific, UBS Global Wealth Management Head and Chief Executive, UBS Hong Kong; and Surendra Rosha, Co-Chief Executive Asia Pacific, the Hong Kong and Shanghai Banking Corporation. And I'll hand over to our panel. Please give them a big welcome.
Okay, thank you. And good afternoon, colleagues and friends, and welcome to the fourth and the final session of this conference. So we have heard from central bank governors in the previous three panels on inflation, growth, future monetary systems, and central banking. And of course, let alone central banking in the past 30 years just now. Now we're going to switch gear a little bit to hear from the market and private sector executives on how they're going to see the future of Asia and what can we do or can they do to ensure a more inclusive and prosperous Asia in the years ahead. So we have, of course, a fantastic panel with us on these sessions. And of course, all of them need no introductions. But for the sake of the formalities, please bear with me to have a quick round of the short introductions for each of the panelists. Of course, immediately to my left is Filippo Gori, CEO of JP Morgan Asia Pacific. Philip's left is Eric Jing. Eric Jing is the chairman and CEO of Ant, the great Ant Group, not small Ant. And on Eric's left is Amy Low. Amy is heading UBS Hong Kong and in charge of wealth management for UBS and UBS in Pacific. In Asia and the Pacific. And of course, the further left and is Surendra Rosha. Surendra is the co-CEO for HSBC in Asia and the Pacific. So these are our panelists. In the next about 60 minutes, I will first, of course, ask the panelists to say a few words about what they see, the opportunities and challenges for Asia in the years ahead. And of course, then I will pose a few questions for each of them. And before I turn into the floor questions and answers. And finally, I will conclude by asking the finalists to share with us their final thoughts. So without further ado, let me start with Filippo. So Filippo, what are some of the key challenges, opportunities you see for Asia's economic growth in the years ahead? You have 5 minutes.
Thank you very much. So I feel almost speechless, no? After coming on the stage after a panel like the one we just had with so much history and wisdom and everything else. Anything we're going to say on this panel might not be so attractive or exciting as we just heard. But let me try to put some thoughts into this. Asia, opportunities and challenges. First of all, Asia, it's a fantastic region for JP Morgan. We have been here for just over 150 years. We celebrated 100 years in China 2 years ago, and we are preparing to celebrate 100 years in Hong Kong next year. It's roughly a third of our global workforce is actually housed in this part of the world. And it's providing the firm with an incredible, diverse talent pool that gives an enormous leverage to the global organization. We offer the normal full suite of products that we have elsewhere in the world, with the exception of retail. And therefore, we operate in Asia as we would operate in any other country around the planet. In my mind, there are three main themes that I would like to highlight in this short conversation. Number one, starting with the obvious one, the geopolitical winds have been blowing now for quite some time. Maybe they have abated a little bit in the last couple of weeks, but the long-term impact is still not necessarily fully understood. But the impact on trade and financial services is actually much more nuanced. And what I mean by this, Asia has definitely been the huge beneficiary from globalization. And we could make the argument that Asia has also been the beneficiary from an FDI standpoint of the fact that for the past 15 years, largely the Western world had an almost zero-rate scenario for almost 15 years. Nevertheless, let's look at the facts. The GDP has grown 4 times in the last 2 decades. And Asia represents now a third of the global trade, which, by the way, global trade and services peaked last year at almost 65 trillion, notwithstanding the geopolitical headwinds. And the region is not only a China story. There is also India, which could become a 5 trillion economy by 2026. And you could see, therefore, in the near future, let's say by the end of this decade, the 50% of the global GDP is produced in this part of the world. And you could well have the second, the third, and the fourth largest economies in the world in Asia Pacific. Now, it is clear that the geopolitical headwinds are creating or potentially pushing some fragmentation in the supply chain, some disruption, and so on and so forth. But it's also difficult to think that supply chain that has been working for the past 2 decades very well might be completely changed overnight. I was talking to a CEO of a European company a couple of weeks ago that indicated there is no such a thing as the China +1 strategy. Maybe there is a China +N strategy, whereby a variety of countries will get some pieces of the supply chain and the whole concept of nearshoring, onshoring, and so on. Another topic that for us is important is the rise of the innovation economy. Asia Pacific has a population that is very young. It's digitally native. Eric can talk about it much better than me. And therefore, the opportunities that we see in this part of the world to rethink about financial services, in particular in the payments business, which is now relying on structures that have been there for 50 years, it's primed. And we heard this morning around at this panel with Ravi Menon and company around the opportunities that are actually coming, CBDCs and everything else. Finally, the last point I would like to make, it's an opportunity, but it's also a challenge. It's climate transition. Climate transition in the sense that Asia Pacific represents 45% of the global greenhouses emission, with 3 of the top 5 emitters. We as a firm have a $2.5 trillion green financing target by the end of this decade, and we have created a Center for Carbon Transition to help us help ourselves and advise our clients on how we can meet certain targets. Now, Asia Pacific can actually, in my opinion, lead part of the transition from the brown economy to the green economy, because in certain sectors there is absolute dominance of this part of the world. Think about EVs, batteries, solar panel, and so on and so forth. And if it's true that some of the expectation that the size of the EV sales by the end of this decade will approach 50 trillion US dollars, you can see how this can be a challenge, but can also be an opportunity for the region. Let me stop here.
Great, thank you, Filippo. So much hopeful. You mentioned, financial innovations. Let me turn to Eric. Same question to you, but particularly on the financial innovations. Please, 5 minutes.
Okay, thank you for having me. I'm very honored to be here today. And SME, plays a very critical role in terms of for a more resilient economy across the world. SMEs has always been our passion and a commitment. That's why we call ant small ant. We're always trying to see from SME perspectives what the pain points they have, how we can using technology to help them out. So in China mainland, we have been able to providing unsecured financing to more than 50 million SMEs across China accumulatively in the last 7 to 8 years, with the guidance from regulator and also the partnership with other friends and companies. And globally, internationally, we are also kind of sharing this, can exchange the experience and know-hows and a credit tag with our partners across the region. But one of the new booming trend we are looking at for SMEs is with the digitalization, a lot of SMEs right now participating in a cross-border trade. So according to third-party statistics, for the year 2021, cross-border B2C e-commerce is recorded about 785 billion US dollars. Year-on-year growth more than 20%, and is still projected to grow at that speed for the next few years or even longer. So that's, for example, SMEs through Tmall International selling to China consumers, or through the Amazon to European and to US market, or through Mercado Libre to reaching Latin American consumers. But then the challenge for them is that they have to do their payment collection from different platforms across different regions, across different currencies, right? Then also foreign exchange management and also the payout management. So it's a lot of challenges. So we have been using technology to help them. So using a lot of AI for their treasury management and risk management or their foreign exchange management by partnering with JP Morgan or with HSBC, other partners here. But we're still seeing a lot of challenges for them. We are also kind of right now piloting, actually in Hong Kong, with their regulated guidance and via their sandbox kind of mechanisms. So seeing whether we can use through the tokenized deposit, right, to further enhance efficiency. Because even previously, not through DLT, it's still information layer and settlement layer is two different things, right? You can information layer got there, but settlement take a few days. If you want to settle instantly, you have to rely on liquidity provided by the banks. But if with the new kind of the tokenized deposit or CBDC type of things, so you can settle it instantly. So then we can through that, we can bring down the cost of international kind of settlement to really real time, always on module. Right now it's only available for working days, right? Your normal settlement, the transaction time is 2 to 5 days. So that's something we can average. So we are very excited to see that the central banks, Hong Kong, many other central banks are introducing CBDC or pilot tokenized deposit, the type of things. We are very, very much looking forward to partner on that. Because we are kind of based on that infrastructure, we can providing more commercial product solutions, right, to really bring the solution to the millions of SMEs across the world. So that's number one on the payment side, a lot of synergy by private and public sector to collaborate to benefit SMEs, to help them to do more international business. The second part is lack of trust. That's another issue is for them is the lack of trust. Right now, still rely on the net of credit to kind of address the trust issue. That's very high. So we are thinking with the DLT, blockchain DLT technology, with the kind of privacy preserving computing, can we providing universal, international, global digital identity or credentials to help them easily can do business globally, right? To making the know your business journey or know each other journey much seamless, much easier, right? Either maybe for them to open a shop on the platforms or for them to get financing, get access to the trade finance as well. So we are also launching that product of this kind of product not only of last year. We call it Global Voyage. So through one click on our platforms, so we can help SMEs submit those credentials to the e-marketplaces. Right now, already 28 global top e-marketplaces already we have partnership. So just through click right now, SMEs can have a shop opening on that marketplaces in less than 3 days. So further with the VPI integration, only in less than 4 hours. So making that not much easier. So that's something we are looking at. SME is really very important for the resilience. So we wish to have another partnership with our friends and our ecosystem partners across the world. So that's let me stop here. Thank you.
Thank you, Eric. So even a small ant can generate huge wealth. So now, Amy, your perspectives from the wealth management perspective.
First of all, thank you so much for having me. Asia Pacific continues to be a very, very important growth region for UBS. Actually, we are also celebrating our 60th anniversary next year in Hong Kong and in Asia Pacific. And if we look at the challenges for Asia Pacific, despite the fact that if you look, Asia Pacific is contributing a significant percentage of the global GDP, 40+%. Obviously, it's increasing, shaping the global landscape, but at the same time, it's also exposing to the geopolitical kind of risks. And number one concern from our client, both institutional and also the wealth client, and also in the industry survey, is geopolitical. The challenge, the war in Ukraine, the Israel kind of situation, and also the presidential election in both US and Taiwan. So that's actually has been named as one of the top risks among our clients. And then the second one is also the high rate for longer. Because with the high rate for longer, what we have seen is tighter credit. That also results in higher borrowing costs, and we have actually witnessed significant deleveraging. And that hurt, in a way, the corporate profitability and also the investment incentive. I was actually talking to one of the corporate this morning, the CEO, and looking at the rate at current level, he said it's 5 times, 6 times higher within a quite short period of time. So the investment incentive has also been reduced. And that also dampened the consumption. And the FDI investment into Asia has also been affected. And so that's also the macro. So when we had the discussion yesterday at the BIS meeting, if we said higher for even longer, that's going to be very, very challenging, rather than high for longer. And so that also has been one of the another top concern among all the clients as a big challenge. And then the third one, I would say, again, talking to our client, is the poverty. If you look at around the world, the level of poverty and the widening of the income gap stay at very high level. So again, that also has been one of the discussion among both the institutional client and also the wealth client. What can they do? And that's a kind of challenge. And last but not the least, on the challenge list, I would also echo what Filippo said earlier. It's also the decarbonization. So the challenge is how are we going to reduce the carbon emission at the same time facing also the surging kind of energy demand in the midst of some of this kind of growth in different parts of the world in terms of the industry. Having said that, we are still optimistic about Asia, otherwise we will not continue to grow out here. The commitment definitely is in Asia. Why? Because if we look at, in terms of the domestic saving rate, Asia has the highest among all, okay? And if you look at also the wealth creation, again, Asia has the highest number of high net worth individuals outside of the US as a region. And even when China slowed down, according to the Uren report, the number of ultra high net worth and high net worth individual, the growth percentage is still single digit in 2022. And also, we just announced our third quarter result. And if our third quarter result, we have recorded a net new money of $22 billion. And more than half is from Asia Pacific. Asia Pacific contributed 13 billion. So that also speaks for itself, the wealth creation and also the growth opportunity in terms of, for example, in the wealth side and asset management. And then, while earlier we said way higher for longer is a challenge, yesterday we also discussed we expect rate cut, and that will certainly help the FDI investment because we expect, actually we forecast the FDI investment flowing to Asia 15 to 20 billion in the next 4 quarters, if that happens. Okay, and that certainly will help the kind of a consumption, and also with the rates really turning around, with the peaking of the dollar, what we've been discussing with the client is also potentially that will help the Asian currency and the Asian bond and equity. Okay, so I think these are also some of the positive. On top, obviously, the technology innovation in Asia, I won't say too much with Eric as the expert here. It's a lot of, now we have seen some of this kind of innovation also coming from Asia, and that also potentially driving the kind of growth, and also with the green transition here. So maybe I stop here.
Thank you, Amy. So Surendra, higher for longer or high for long is a challenge or opportunity for you?
No, it's definitely a challenge. But let me start by saying it's a challenge for our clients and therefore a challenge for us, right? But I'd just like to add on, because my panelists have covered a fair bit of the ground in terms of challenges and opportunities. We are a global international bank that where we have our Asian headquarters in Hong Kong, which is where we started in 1865. We operate in 19 markets across the region. For us, our internationalism is our strength. It's our raison d'etre, right? So if you think about the challenges of geopolitics and some of the shifts that are happening that various panels have spoken about today, it is a challenge for a global bank like us, but it's equally an opportunity in helping our customers navigate those challenges. And I think often we forget that in the context of supply chain resilience and all the other conversations that happen around China plus one or China plus N, as Filippo said, is also the fact of cost, right? I think China today versus 20 years ago is a different cost environment. And that is also driving some of the shifts that our customers are making in thinking about the next place where they manufacture. And it's the opportunity for an organization like us, with the presence across the region, with presence in other parts of the world, to really be able to advise them on those shifts. So we do see that as an opportunity, a challenge that converts into an opportunity. We spoke about innovation. You know, the technological innovation that's happened in the last 10 years in payments in Asia, for example, has enabled us to do business that we couldn't imagine doing 10 years ago. To give you an example, in India, for one of the global ride-sharing companies, every evening we pay 100,000 of their drivers their daily wages based on what our customer, which is the global company, tells us to do. We have 26 branches in India. We couldn't do that with 26 branches 10 years ago. It's because the payment infrastructure is in place today that we are able to tap into that opportunity. Today, when we have customers in China or in Malaysia who want to send their kids to Australia to study, we are able to open their accounts and hand them a credit card before they land in Sydney, for example, or Melbourne. This is possible because of technology. So I think the challenge of innovation is to be consistently looking out for opportunities where we can add value to our customers and really stay focused, because you can get into a lot of experimentation, defray a lot of cost. But really, where is the place for us to add value to our customers is really the key to the thinking. And the last bit I'll add is just on sustainability and decarbonization. I think it's for us in many ways, along with banks like JP Morgan and UBS, we've played a fundamental role in building the industrial architecture of today. Many of the entrepreneurs we've funded for generations in Asia are looking at what that shift means for them. There's going to be a significant cost to this. It's going to embed structural inflation in our economies. But I think equally, it does, as Mark Carney said recently in an article in The Economist, finance needs to go where the emissions are. And we as a collective group of banks need to do that. And I think this is where, to me, is the biggest challenge for the next 7-8 years, is how do we move from that statement to actual use cases that we can scale up and execute on.
Okay, thank you, Surendra. So we have heard the perspectives from the four panelists on the challenges, opportunities. But let me zoom in a little bit and ask them what their views on some of the particular points. We have already touched upon the high for longer. So Philip, your company has been here in Asia Pacific for the last 150 years, so it's quite long. And of course, the company and now yourself witnessed quite a big of change in terms of the landscapes of the financing, including the financing cost. So come back to the issues of, high for long. In your eyes, what has changed in terms of the financial conditions or the cost to moving forward?
So, as I mentioned earlier, Asia's been the beneficiary from globalization, and to a certain extent, Asia's been the beneficiary from a low-rate environment in the rest of the world for the past 15 years. So that you saw some of the FDIs flowing in over here. Now, some FDIs have disappeared. Part of those FDIs might have been replaced by others, and so on and so forth. Now, if, as Amy said, if the markets are priced into perfection, and therefore next year there's going to be rates cuts and the trend will reverse, then part of the issue of the high for long might not be there, because it hasn't yet really felt through, broadly speaking, through the economies. On the other hand, if it's not so much how high now the problem, but is how long rates will be higher, then Asia could face Asia, as the rest of the world, would face some headwinds. And some of the things that we've spoken about over here, including decarbonization, have a component of generating a structural component of inflation in the system. So like Mr. Hildebrand said earlier in his panel, there is a high likelihood that in the future we might be facing an environment where monetary policy might be more restrictive than we have seen so far. If we look at Asia specifically, inflation has been generically more benign than in the rest of the world. Clearly, the mainland doesn't even have an inflation problem. And overall, the balance sheet of the Asian central banks is much less, is in terms of size, is much smaller than the Western central bank. So there is more firepower on this part of the world. In general, corporates have been relatively cautious, and therefore, with innovation, with efficiency, and so on and so forth, the region will drive through the next few years, assuming that that the expectation on rates are roughly correct.
Okay, thank you, Filippo. Eric, a moment ago you mentioned SME and trust. So your company, of course, is engaging with this business using new technologies, of course, using the data. So the question for you is, as we have seen in some of the Asian economies, including China and India and others, people are taking this advantage to leapfrog the move ahead compared with their more sort of economic advanced counterparts in terms of reducing the digital divide and enhancing the financial inclusions. So in your company, what you are doing and how would you assess these measures you have taken to enhance the financial inclusions in particular?
So thank you for your question. Maybe just share a case of the tokenization of real world assets. People are talking about tokenization. Maybe we share a real business case which we are doing. There's a company, they call the lift platform equipment, the leasing company. So we've been able to, we put a DLT blockchain module embedded in a chip and put into the control box of the machine. Then you turn on the machine, so all the data is on the blockchain. So through the tokenization of these real world assets, it's really creating the multiple party collaborate seamlessly on that. For example, with that, so the institutional investor very comfortably know, because when you turn on the machine, you know exactly where the equipment, what's the different working types the machine is doing, how many working hours is the machine is engaging, right? So and they comfortably figuring out what's the ROI for that. So institutional investors, they are being very comfortable to invest in the machine. There's a leasing company transforming into assets NAD module. They just in charge of the operations. The insurance company also come in because based on the data, they're being able to launch UBI, usage-based insurance. Then we as a tech platforms, so we are 4 parties working together, seamless on that. We really kind of enhancing the efficiency of the economy by the whole value chain across the industry work seamless together. Further, on top of that, we've been able to bring in CBDC with smart contract. So once, for example, the leasing, the revenue come in from the leasing, right? They automatically can settle, distribute, allocate to all the investor and the operation party, and also the pay for the insurance, and also the tech provider. That's the case we are doing. Not only in the tokenization for this typical type of equipment, but we're also using that tokenize the distributed rooftop solar, or the EV battery. Although we are also discussing with HKMA regarding tokenization of the two-wheel, the electric bicycle as well. That's a lot of popular things, in China market, the shared electric bicycles as well. So that's a lot of things happening. We are seeing that huge potential with that new technology, greatly enhance the making the enabling and multiple parties collaborate very seamless together and drive overall the efficiency for the economy. That's one thing that's happening. We are seeing very interesting, and we are talking to partners whether we can further expand that.
Thank you. Thank you, Eric. So, Amy, you just mentioned that Asia has a great deal of the wealth, and that's true. And of course, this region does boast the largest amount of reserves. And at the same time, the region also facing a big financing gap. Just quote the figures prepared by ADB, Asian Development Bank, which said the regions need 1.7 trillion US dollars annually by 2030 to maintain adequate economic growth, battle poverty, and mitigate the climate risk, as you mentioned earlier. So at the same time, we are facing the rising interest rate, possibly for longer, like it or not. I believe all the governors within this room can witness on that. So we are seeing the market may face the volatilities. So as a sort of if I coming to you for advice, as a countries or jurisdictions, how would you advise me to allocate my reserves so that the people of the countries or the jurisdictions would be benefit more? Please.
There are so many experts. I won't say I can give you better advice than all of the experts sitting here. But actually, managing 5 trillion assets globally for UBS, and we have also been sharing a lot of the endowment style kind of investing, aiming for longer return. So basically, what we said is diversification. It's having a diversified portfolio across the different asset classes is important in order to really be able to shelter a lot of the volatility there. And obviously, the traditional asset classes like the bond, equity, in that endowment style investing is still a big portion. And what we've been advising is stay with the quality, both on the bond, investment bond, and also on the equity side with positive saving and also the strong kind of balance sheet. That's important. And in addition, what we've been observing, talking to a lot of these institutional and also global family offices, it's also important to look at diversification to some of the alternative, especially in the midst of the inflation, higher interest rate. One asset class that stands out is also real estate, because that offers also real adjustable kind of return longer run. Okay, and the other asset class that's important is also commodity, especially addressing right now the geopolitical situation, like gold and also some of the hard currency to hedge your portfolio and create the liquidity. As a matter of fact, we've been seeing also increasing demand for gold to the extent some even ask us to set up the gold vault in different locations for them. So as a kind of hedging to the geopolitical kind of situation. And now more and more, we've been seeing clients also looking at diversification across a different jurisdiction, geographically. And again, then we will be looking at, again, those countries with positive kind of saving rate, positive current account deficit. I think in Asia we have a lot, like Korea, Japan, China, Taiwan, Hong Kong, and Singapore. And so I think that's also in board, the kind of diversification. At the same time, if I may also give advice, especially now earlier in the previous panel, we also talk about the global problem, like the inequality, and also some of these issues. I think what the central bank or the government can do is also to implement some of the policy that will attract, for example, some of the family offices. Because the family offices come, the other capital, foreign capital, foreign direct investment will come, and also the philanthropic capital. I think that's very important because the world's problem is too big to be solved by any single party. If you look at the philanthropic capital around the globe, even the one having the highest in the US is talking about 3%. If you look at real donation, it's talking about less than 1%. And leaving alone, talking about Asia is very, very small percentage. So, for example, if we have some of the policy to attract some of this kind of charitable foundation, and that's why a few countries also position themselves as the philanthropy hub, and that will also help some of this capital to come in, and then the private and public sector working together, and to also look at some of this kind of global issue, be it income equality or the ESG kind of issue. That's why another very common topic among our client global family offices is look at collective philanthropy. In the past, they want to do it on their own, but now, if we can join hands together, we can make the world a better place. So that's also maybe the other part of the investment I can advise on, and that will really help the society and also the country on a longer basis. Thank you.
Thank you, Amy. Surendra, you just mentioned you have quite a wide range of the services to the customers. So as a happy customers I am to the HSBC. So let me ask you questions. You have been here for many years, and particularly here in Hong Kong, and you're traveling across the regions. And so you are no stranger to the extreme weathers event in Hong Kong, and of course the beyond, and Asia and beyond. And of course it is very difficult for all of us to think about extreme weathers in such a beautiful weathers outside the hotel, particularly like this afternoon. But don't forget, not long ago, the Hong Kong experienced 2 typhoons graded 9 and 10, and in between black rains here in a matter of the weeks, just in September and October. So this is also true, actually, pretty much in Asia and across the world. Extreme weather events are more frequent nowadays, and everybody feels it bigger and wider in terms of the impact. So as a financial institutions like yours, what kind of steps you want to take it further to help finance the green transitions or climate transitions? I'm not asking whether or not this is a core mandate of your institution or not, but how would you do it? Thank you.
Thank you. And in this morning's paper, I was reading that some of the research done by Hong Kong universities tell us now that the events we've seen over the last few months are likely to increase in intensity in the years to come. So it's even more of a compelling issue that we need to deal with. Look, it is very much a live issue that, to paraphrase what Amy said, one institution cannot solve. And we have to really come together collectively to do this. So the way that we are approaching this is how do we catalyze ecosystems or collaboration around specific problems. So we've done a joint venture that we launched last year, for example, with Temasek, where we have ADB in as well to look at how we can bring in blended finance and crowd in institutional investment, along with bank finance into helping transition. So the entity Pentagreen did their first transaction in Philippines recently. We are hopeful that this will start to pick up much more across Southeast Asia. We, along with 5 other banks, are involved in the Just Energy Transition Partnership with Indonesia and Vietnam and the relevant G7 governments to try and identify how we can implement the phase out of coal. Now there are 5,000 coal plants in Asia. 90% of them are less than 20 years old. They've got a long life to run. It's 1/3 of Asia's emissions. How do you solve for that particular challenge is going to be critical. We've worked with DBS to co-chair and write a paper on the managed phase out of coal. That's been out for public discussion. It's now in the final stages. We hope to publish it at COP next week. So I think there's a lot of things that we have been doing, and other institutions, including those on the panel, have been doing. And I think it's perhaps now time to bring this together in Asia around our customers. So we start to think about specifically, power utilities in Southeast Asia. How do we help them collectively to work? How do we work as an international bank with local banks to make a transition finance package that works for the current asset owners, for the community, for the lenders? It's not easy, but we need philanthropic capital, we need endowments, we need bank and capital markets to come together. So I think that's really the focus for us right now, is taking some of these initiatives to scalable level, working with other partners in the ecosystem.
Thanks, Rendra. So we have covered quite a bit. So now we see the challenges and as well as opportunities, including, for example, financial stability risk, rising debt, and we probably have mentioned the aging, and also the transition, green transitions, so on and so forth. So with that, let me turn to the audience for questions. I will pick up a few questions in one go, and then revert to the panelists for answers. So questions? Yes, please, Arthur. Microphone?
Yeah, thank you. Arthur Yun from Hong Kong Monetary Authority. I would like to put the questions to bankers on stage. Not because I supervise your institutions, but really, when you were talking about the challenges, you did not specifically cover business model risk for banks. Because this morning in different panels, we actually touched upon that particular issue of business model risk for banks. So, but you did not seem to think that that is a major thing for banks in this part of the world. And then when I was thinking about business model risk, I can't help to notice the setting on stage, that the tech firm is taking center stage, bankers were squeezed out, but unfortunately BIS is totally marginalized. So my question is really to the bankers. Are you worried about business model risk in terms of the challenges posed by tech firms? That 5 years, 10 years down the road, this will be the scene that we're looking at. Of course, Eric is of course welcome to comment on that as well. You mentioned collaboration twice in your comments. Do you think the collaboration would lead to a more optimal outcomes than a displacement sort of notion? Thank you.
Thank you, Arthur. We'll try to be more proactive in the future. Any more questions from the floor? Oh, okay. Augustine, please. Microphone, here. Augustine.
Well, thank you very much for this very interesting panel. I was expecting some of you to mention one. I think for me, from my point of view, it's a huge comparative advantage in Asia. And it is a fact that the propensity to save here is very, very, very big. I think a very large world savings comes from here. If my speech was right, I hope it was right, it said 45%. Now, of course, I come from a region where, from Latin America, where we don't have that advantage. And of course, you see corporations struggling to get financing. And this reflects both at the different degrees, large firms, but also small or medium-sized enterprises. Governments cannot have, appropriate investment pools for infrastructure and so on and so forth. So comparatively speaking, especially many of you that are global, do you see this as a key advantage in Asia? And how do you see that savings advantage can be mobilized even further than what it is done today?
Thank you, Augustine. If no more questions from the floor, let me turn back to the panelists. Can address either of the two questions or both of the questions. Amy, please.
Obviously, as I said, also one of the opportunity for Asia is the kind of saving rate. And for example, China have also the biggest saving rate among the world. And obviously, right now is the confidence level to spend. And I am hopeful because once the confidence level come back, obviously, I don't think they will go naturally in the past to housing. So that will certainly help, for example, the finance market. But the confidence level need to come back. But that will provide really the potential for the Asian economy for future growth, be it in capital market, be it in the finance market in terms of investment. And also then it also trigger more investment incentive for the corporate, and it certainly will have the kind of lingering effect. If I may also address Arthur's question, certainly the business model wake us up at night and day. And often we said the biggest meaning competitor or the challenge may not be the traditional bank. It's also people like Eric. But I won't say it's a challenge, but how are we going to work together in order to address a lot of kind of issue? It's not just the front get more business, but even middle and back. How we can leverage on technology to monitor the risks and also to do all the surveillance, do all the data analytics. So the business model is one big thing, and that's the reason why for UBS, being a traditional industry, we also venture into digital wealth management and looking at also collaboration and partnership with some of the big tech giants. And I think that's the way to go. And so certainly this is on top of our mind, in addition to some of the other trends. Because the other thing is that what we've been observing in Asia is also the demographic, the shifting of the demographic. With the aging population and the rise of the millennial and the Generation X, that cannot be serviced by the traditional kind of model and also the traditional bank like UBS. So I think that pose both as challenge and also opportunity that we need to work together, and look forward to embracing technology innovation with my partner. So definitely the business model is something that stay in our mind day and night. Thank you.
Thank you, Amy.
So to answer Augustine's question, yes, definitely. The growing sophistication of the institutional investor client base in Asia is one of the things that, in my opinion, has dominated the past decade or so. Not many people know, but the largest pension fund in the world is in Asia, and it's in Japan. And the largest pension fund industry is actually in Australia with the superannuation business. And my impression of some of those clients is that over the last decade or so, they have transformed from asset gatherer to asset managers, and they are contributing heavily, for instance, into infrastructure sector, green transition, and so on and so forth. So they are a great source of strength for this part of the world. I mean, I come from Italy, which has a great saving rate at people's side, but not the countryside. So of course I would love to have institutions like that in our own country. But yes, it's one area of strength for this part of the world. In terms of the business model change, of course, the guys in New York never don't sleep at night about it. And that's the reason why, for instance, I didn't mention it here, but we never had retail outside of the US, because Jamie Dimon doesn't think that we have a competitive advantage in doing retail outside of the US. But for the first time, we thought that technology is giving us the chance. So we launched Chase UK a year and a half ago. We bought 46% stake in a Brazilian digital bank called C6. And we have bought a stake in Viva Wallet, which is a Greek transaction payments system, because you want to diversify away as much as you can the business model, recognizing that the threat is probably coming, in our opinion, more from big tech at this point, American big tech in that context.
Oh, thank you, Filippo.
Yeah,
Eric?
I also want to give a brief answer to Arthur. So as far as I know, there are both Tao, Filippo, and Amy and Rachel are all based in Hong Kong. So I'm traveling from mainland. So thank you for HKMA, BIS, and Hong Kong treat guests well. So put me in the middle. That's the reason why I put me in the middle. Then secondly is because I'm, kind of the digital connectivity. Digital connect all the partners together to really kind of unleash the power or synergy of us to providing more service to our customers. Actually, to be very frankly, we have a lot of things working together. With any of them, we are so much kind of on our project list, one by one. So much things because we are very close to the ecosystem, to the SMEs. We have the tech, but in terms of global banking capacity, that we don't have. There was so much we were working together. Our focus really about on the customers. So what we can do by working together, that's something we are looking at. So we are quite complementary. So that's my answer to you. Thank you.
Thank you, Eric. Surendra?
Yeah, just to build on what Filippo was talked about in terms of the savings piece, I think it's also what we see in many of the emerging markets over the last 25 years in Asia is the resilience in the system has built up because domestic savings have been channeled into the capital markets, into equities, into bonds. And that has created a far greater degree of stability when there's volatility. So when we see the sort of risk off on emerging markets, we don't see the level of sell-offs that used to happen 15 years ago happening today. And I think that's really important to recognize the strength of Asian savings there. On Arthur's question on business model risk, look, I think it's definitely something that we consider as a significant risk or a top risk, but from a slightly different perspective. It's more about data and areas around data. So whether it is cyber, whether it is the issue of emerging technologies like quantum computing, et cetera, that are coming through and how they are likely to impact us. And therefore our need to play a role in working with people who are dealing or leading in that technology space. It has to do with data nationalization that's happening in parts of Asia where there's fragmentation now and how we can move data across borders. And when we think about financial crime and such sort of areas that we need to work through typologies across markets, these are some of the challenges we are seeing in the business model. It's perhaps less to do with tech firms where I think we do collaborate quite a bit. My concern actually is that the high cost of capital is going to drive away the innovators of the last decade because it's going to become much more expensive. So we won't see the level of broad-based innovation in the wider financial ecosystem that we saw in the past. And that does concern me. Yeah.
Thank you, and thank you all. If any no more questions, let me have a final round before we closing. Let me ask each of you in a line or two that although I very much wish each and every night you have a good sleep, but let me ask what keeps you up at night and what gives you hope next morning. Start with Surendra.
Look, I think it's really fraud risk and what the bad actors outside of the industry are doing and how we are able to catch them early. That's what really keeps me up at night. And I'd say the creativity and innovation level in our Asian customer base is what really excites me every morning when I wake up. Yeah.
Amy?
Again, also fraud risk or risk in general, be it geopolitical and deglobalization, and also risk management in general, that really wake me up at night.
Thank you. Eric?
I think two things. Number one, I think digital dividends should not be the rights for the big companies. It should be for every SMEs and every individual. I wish we can join hands, join efforts together to help SMEs and for a more resilient global digital economy. That's number one. Secondly, if you want to go fast, go alone. If you want to go far, go together. That's my.
Thank you, Eric. Filippo?
What keeps me up at night are late night calls from the US. Which whoever works for an American company knows what I'm talking about. But in general, it's cyber, for sure. And what's bringing enthusiasm is our people in Asia.
Thank you, thank you. That's very much true. And we all wake up in the morning, good morning, Asia, good morning, Hong Kong. Great, so thank you once again for the very interesting, very fruitful discussions. And of course, we certainly cover quite a bit. So I don't want to intend to summarize the discussions, but would like to invite everybody to join me to give a warm, a big round of applause to the panelists.
And thank you, Zhang Tao, for moderating our discussion. Can I ask Zhang and the panelists to all come forward for a group photo, please? And hold the smiles for our media photographers who are at the back of the room. Thank you very much, ladies and gentlemen.